In the previous video, I told you about commissions, and commissions are the fees that your broker charges from you. Well, there is one more fee which your broker will charge you, and it is called as swap fee. Whenever we borrow money from someone, we have to give them an interest, and when we loan an amount to someone, we have to charge an interest on the loaned amount. Now consider you have a friend named Dan, and you borrowed $1,000 from a friend named Dan at an interest of 5%. Then what you did is you deposited that amount in the bank, where the bank is going to give you 4% interest on that $1,000. So in this case, you have to pay 1% to your friend as the difference between the interest rates of both the parties. Now suppose Dan gave you $1,000 loan at a rate of 4%, and you deposited that money into your bank, and your bank gave you an interest of 5%. So in this scenario, you will receive 5% interest from the bank, out of which you will give 4% to Dan, and you will be left with 1%. So the swap fee works in the same way. In the Forex market, the swap fee is the difference between the interest of two countries involved in a currency pair. Whenever you hold a trade overnight, you are charged with or paid an interest, and that is called as swap. In more technical terms, swap is a charge or interest which your broker charges or pays you for holding trading positions overnight to the next Forex trading day. The broker charges or pays you a specific amount of commission depending on the interest rate difference between the two countries involved in the transaction, on its direction, that is if you are buying or selling, and the quantity or the number of units you are buying or selling. In a more simplified way, whenever you hold a trade overnight, your broker charges you with a fee or pays you interest for that trade. If the broker will charge you with a fee or pay you the interest depends upon certain factors like number 1, the currency pair you are dealing with, number 2, your account's currency, number 3, interest rates between two countries' currencies, number 4, the direction of your trade, whether you are buying or selling, number 5, the number of units you buy or sell, and number 6, the markup fee of your broker. Now let's try to understand how does swap work, or the idea behind swap. Every currency in the world has its own interest rates. These interest rates are managed by the central banks of the respective country to which the currency belongs, and hence is used to manage the economy of the country. Like you must have seen, there are different interest rate news going on in the Forex news section. These are the interest rates that are decided by the central banks of the respective country, depending upon the economic situation. So whenever you hold a currency, you get interest on it. Now, whenever you buy or sell anything in the Forex market, two different currencies are involved in it. These currencies will have their own interest rates, right? So according to the rules, you can hold a currency for a day without any interest charge. But as the new trading day starts, you will be charged with, or you will get the difference in the interest rates of the two currencies you are involved with. And this is called as a swap fee. I hope you understood everything. See you in the next video. Thank you.